When most people first heard about cryptocurrency, they either ignored it, dismissed it as risky, or waited too long to take it seriously. But many early crypto millionaires approached the market with a very different mindset. Instead of chasing quick profits every day, they focused on long-term conviction, high risk tolerance, strategic timing, and understanding emerging technology before the majority of people paid attention. Today we will talk about crypto millionaires used this strategy early, so before we get started, make sure to hit that like button, also subscribe to my channel. 10. Most people join crypto after the big moves already happened. When most people hear stories about crypto millionaires, they imagine lucky investors who bought random coins and became rich overnight. Social media made it look easy. Screenshots of massive profits, stories of small investments turning into fortunes, and viral success stories created the belief that crypto wealth was mostly about timing and luck. But behind many of the biggest success stories was a much deeper strategy that ordinary people often ignored. 9. Early investors focused on conviction instead of public opinion. One thing that separated many early crypto millionaires from ordinary investors was conviction. In the early years, crypto was constantly criticized. Governments questioned it, financial institutions dismissed it, and the media often described it as dangerous or useless. Most people avoided it because public opinion looked negative and uncertain. But early investors understood something important. Transformative technologies often look irrational before they become accepted. 8. They understood the power of scarcity early. One of the biggest ideas behind crypto wealth creation was scarcity. Traditional currencies can be printed continuously by governments and central banks, but certain cryptocurrencies were designed with fixed supply limits. Early investors recognized how powerful this concept could become in a world increasingly concerned about inflation, currency devaluation, and monetary instability. They understood that if adoption increased while supply remained limited, scarcity itself could drive massive value growth over time. This was not only speculation, it was basic supply and demand psychology. 7. They thought long-term while everyone else chased fast money. Another major difference was time horizon. Most people entering crypto markets focused on short-term price movements. They constantly bought and sold based on fear, hype, news, or emotional reactions. Early crypto millionaires often behaved differently. Many held through extreme volatility because they believed adoption would expand over many years, not weeks. They understood that transformative technologies usually experience massive volatility during growth phases. Instead of panicking during crashes, they viewed downturns as temporary parts of a much larger long-term cycle. 6. They invested before institutions entered the market. In the early years, crypto markets were dominated mainly by individual investors, developers, and technology enthusiasts. Large financial institutions mostly stayed away because the market appeared too risky and unregulated. But some early investors recognized that institutional adoption could eventually become a major turning point. They understood that if banks, hedge funds, corporations, and governments eventually accepted digital assets seriously, enormous amounts of capital could enter the market later. And that is exactly what gradually began happening. 5. They focused on networks, not just prices. Many people entering crypto only focused on prices going up. Early successful investors often looked deeper. They studied user adoption, blockchain development, transaction growth, developer activity, decentralized applications, and network effects. They understood that valuable systems become stronger as more people use them. This mindset changed everything. Instead of seeing crypto only as speculation, they saw it as growing digital infrastructure. The stronger the network became, the more valuable the system potentially became over time. This long-term perspective helped investors identify projects with real utility rather than blindly chasing hype cycles emotionally. 4. They took massive risks before crypto became socially accepted. It is easy to look at crypto success stories today and assume the path looked obvious. It was not. Early investors faced enormous uncertainty. There were security concerns, exchange failures, government pressure, public skepticism, and extreme volatility constantly. Investing heavily in crypto years ago often looked irrational to friends, family, and traditional financial experts. But major wealth creation frequently happens during periods when uncertainty is highest and public confidence is lowest. Early crypto millionaires accepted risks most people refused to take because they believed the upside potential justified the uncertainty. That willingness to endure discomfort separated early adopters from later participants. 3. They used volatility as an opportunity instead of a threat. Crypto markets are extremely volatile, and most people struggle emotionally with rapid price swings. Fear causes panic selling while greed encourages emotional buying during hype cycles. Early successful investors often developed a completely different relationship with volatility. Instead of viewing crashes as permanent failure, they viewed them as opportunities to accumulate more during periods of fear. This psychological advantage mattered enormously because volatility repeatedly transferred wealth from emotional investors to disciplined long-term holders. The people who became wealthy were often not the smartest traders. They were the investors who survived emotionally through uncertainty long enough for adoption to grow. 2. They understood that technology changes faster than public belief. One of the deepest insights early crypto investors understood was how slowly society accepts disruptive technologies initially. The internet, smartphones, streaming platforms, and social media all experienced years of skepticism before becoming mainstream globally. Crypto followed a similar pattern. Most people waited for certainty before participating. But by the time certainty arrives publicly, the biggest opportunities are often gone. 1. The real strategy crypto millionaires used early. The deeper truth about early crypto wealth creation is that most successful investors were not simply gambling randomly. They were positioning themselves around the possibility that digital assets and decentralized systems could eventually become globally important long before society accepted that idea widely. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.